Hello again, today is Friday, January 4th, 2018, and this is a market recap for this week. So first, let's look at what we have in for the program. First of all, of course, hit the like button and subscribe to this channel. The stocks are gaining. We will look, in my opinion, they are gaining towards resistance, and they very likely should be shorted at this point. Sectors, countries, everything rebounds. It's all equity. They all have very high correlations. Bonds also gain, and we'll look at the yield curve, which is flattening. High yield junk bonds also gain strongly, so this probably means that the rally for stocks could continue for a little bit more. Look at preferred stocks as well. Then we'll finish off with dollar and gold analysis, natural gas and oil, and finish off with cryptos. Alright, so on this chart of S&P 500 futures, we're looking at the daily chart. On this chart you can see the yellow, red, blue and the green horizontal lines. You can see where I'm hovering. You can find out more about these lines at MasterChartsTrading.com and then click on alerts and indicators. These lines are mathematically calculated, they're not drawn by freehand. So on this chart, what I'm looking at is this resistance in red. It is currently at 2553, and I'm basically waiting for a retest of that resistance level and see what the price would do. So something of this nature that occurred back on December 12th would be ideal, where the price touches the indicator line and then closes below it. The way this rally is going, I think we will go over this resistance, and then this is where the price behavior becomes very important, is that we need to make sure that the rally that started of the lows of 26th of December here has indeed exhausted itself. And if it has exhausted itself and now we see a rollover, then I'm going to consider opening a short myself. So far, I'm basically doing nothing. Some people, are not able to short stocks, but in our days we have inverse ETFs and we also have options. So if you know what you're doing, you can buy puts, sell calls, when or if we get to this rollover point, which we have not yet gotten there. So basically the same picture is on most ETFs. Here is SPY, S&P 500 ETF, and the resistance is 256 here. For QQQ, the resistance is slightly higher at about 159, was basically at 160. But overall, this is a one of the basically the most important chart here is S&P 500 futures, and in my opinion this is bearish chart and should be shorted. So if we break out above 2710, then most likely we have shrugged off this bearishness, but for now I don't see that yet. Of course, pretty much all of the sectors are also gaining together with the general market here. For example, financials sector, XLF, same thing, basically resistance is coming up. Europe, same thing, bouncing off the lows, approaching this yellow line. You can find out more about this at MasterChartsTrading.com. Emerging markets, basically the same thing, basically bouncing off the lows, approaching the yellow line. I would not consider shorting anything until we get to the red lines. So the same goes for emerging markets. Here's China, makes no difference, they're all close to fresh lows. EWG, Japan, strong rally here. You can see that now it is above the yellow line, approaching the red line. So overall there is very little difference between the various stock sectors or countries or equities of various countries. So, basically we're just waiting for a rebound to run itself, for the bulls to exhaust themselves, and then we can look at bearish opportunities. Now, we will get to the bonds in just a second, the investment grade bonds in just a second, but first I wanted to show the junk bonds, JNK. So here is junk bonds again on daily chart, daily time frame. We're seeing a strong rebound here of the lows and approaching now this red resistance line. So in the past you can see that good opportunities were even at the yellow line, but right now this was just way too steep, and I was basically expecting a bounce back. But also notice here back in September of 2018, you can see a very nice opportunity to sell short at the red line. So we are approaching that level. We will see where this goes. Here's preferred stock, PGX, also with a sizable and very sharp gain. It's not exactly the best security to short because of the large dividend that they provide, the preferred stocks, but overall this is kind of interesting chart, and this is what I mean about S&P 500 price action. I think we will see something similar to this, where we see a close above the red, and maybe we'll do something and then we'll roll over and close below the red for S&P. For the preferred shares, it's I think has more to do with the general market than with the bonds. But maybe because of the bonds are bouncing, perhaps preferred shares are also bouncing, because you can kind of think about them as a bond proxies. So here's TLT, and actually I had a position myself. I had the options position also, so I closed part of that position recently, right at basically at the top. But notice the way that this is happening, this breakout is happening, and just the way the price is behaving. You can see that the breakout occurred above this blue line. You can see where I'm hovering, the blue line, the blue indicator line. I actually opened the position a little earlier than I normally do, but then a few days later I was vindicated, and you can see a definite close here on 31st of December above the blue, and then a couple of days of intense rally. And this is kind of what I'm looking for basically in my patterns and my setups. So the same kind of general thing happened to the intermediate bonds, and you can see also that I sent an alert here for my subscribers on 24th of December, and you can see a very nice gain a few days later. For the yield curve, let's look at the yield curve now. So notice how the yield curve is kind of difficult to see. Let me try to zoom in. But notice that right now the short-term interest rates are at 2.32, but the slightly longer ones, between 2 and 5 year interest, is actually slightly lower than the short-term interest rate. So looks like the yield curve is beginning to invert. Now, it doesn't mean we were going to immediately, roll over as we did, for example, back in 2007 or so, and we actually took a while to roll over, and I already showed this where the interest rate curve inverted and then took a while to roll over finally. So I'm not saying that this is exactly what's going to happen, but I am seeing a inversion of the yield curve, beginning of the inversion of the yield curve, and in general this does not bode well for stocks. All right, so again, to reiterate for stocks, bonds, relationships, I think stocks will gain slightly more, and I think around 256 for S&P 500 ETF SPY. I think we may see a top-in action, and then once the top-in pattern is complete, then we can potentially open shorts. Right, let's continue to the various commodities and forex instruments that I track. So here's one DXY dollar index. In general, I still think that this is a bullish chart. The thing that worries me the most about this chart is the behavior of gold. And so let's just look at that. XAU USD. So I think the breakout did occur right there on January 3rd, 2019. And I think from here on we'll see price appreciation for gold. This would normally imply that dollar would be depreciating in price versus other currencies. And actually similar price action happened this week with the Japanese yen. So maybe I'll show yen next week. Today I don't want to show yen, but let's just look at this chart of gold, XAU USD. I like this price action. You can notice that back in October, you can see clear top-in action, top-in pattern, and then a rollover. So this would have been enough to make decent money here on this rollover. Here in the mid to late December, I actually did not send any alerts because I thought that this price action was more bullish than bearish, so I didn't send any alerts here. And now notice that I was correct, and we see appreciation of price towards outright bullish levels here above the blue line. Again, you can find out more about this indicators at MasterChartsTrading.com. So it looks like gold is breaking out. Would that mean that dollar is breaking down? It is entirely possible, and we will need to watch dollar and gold relationship very closely in the weeks and months to come. Natural gas actually broke down. You can see a breakdown right there on 28th of December with a nice collapse towards the yellow line. Notice how nicely it bottomed again around the yellow line right there. Just sometimes very cool to watch that price action. Notice right there how it bottomed around here. I mean, I still think that right now natural gas is in a bear market. Before, right there on 3rd of October, I thought natural gas was in a bull market, and yes, lo and behold, it went higher. But now, following this breakdown on, let me turn this arrow around. This breakdown occurred on 28th of December. You can see a nice loss there. So I think the natural gas should be traded to the downside now. And in fact, here's an alert I sent to my subscribers for UNG with a nice 12% gain just from this Friday, 28th of December, and notice that it collapsed 12% in our favor. So hopefully the alerts, you got the alerts, and hopefully subscribers were able to benefit. Here's US oil. You can see that we had just an enormous move down here. Actually, let me look at the future, CL1 exclamation point. So the alert to my subscribers again was sent right there on 5th of November of last year, 2018. And that was a nice, basically 32% gain. And if you trade futures, and you know it's a very large gain. Right now, oil is rebounding. You can see price action is rebounding from the lows in the 24th, 26th of December here towards the yellow line. So right now we can see that In the past, for example, here back in beginning of December 2018, we had, I would call this aggressive short sellers selling here at aggressive levels. I'm not, so I would be waiting for a bounce towards the $55 range, and then perhaps a rollover and a continuation towards fresh lows. So Bitcoin really does nothing. Litecoin, nothing is happening. XRP USD, probably the stronger ones. But overall, I still think that the Bitcoin and all of the other currencies are in a bear market, so not really much going on there. Alright, if you have any questions, comments, please send them in or comment below, and then head over to MasterChartsTrading.com, that's MasterChartsTrading.com, click on alerts and indicators, and sign up for one of the plans. Now, you can get my price action indicators that I'm showing to you with price action trading, and you can also get them with a complete package here: price action trading, price action indicators, together with the daily newsletter and the weekend videos that I record for my subscribers separately. So lots of good features, especially the risk-free trial, which is 30 days, and you can cancel afterwards also, should you so desire. Alright, that's it for this week's recap. If you have any questions, please send them in. Thanks for watching. Have another great trading week. Bye-bye.